Hello, everybody. We should be able to start this webinar in just a few minutes. Please give us a few minutes. We have other participants to join in. So just give us a few minutes and we should be able to start. Thank you.
Good afternoon, this is Sam, and we'll get started on today's webinar. Sorry for some technical difficulty that I was not able to join a little earlier. But to give you an idea, today's webinar is about interesting topic on what's going on with the new incentive packages that are going on, how these incentives could help or advantage, and what's in it for small business and what's in it for individuals as well. So today's webinar is mostly focused on that what are the new changes that are coming up in this incentive potentially, and what possibly these incentives would bring for individuals or businesses, and what should you be, what can you take advantage of, on this webinar. So the current incentives, what they are going on in today's marketplace is, and I want to show people. Let me pull up that. The current incentives that they are proposing is, which as of yesterday, the no consensus was reached by Congress or by them. And our goal today is to discuss those incentives and how that incentive individually play a role for each individual and how they play a role for a business. Again, my name is Sam Thakkar. Good afternoon for everyone joining this webinar. This is Sam Thakkar, Group CEO, Perfect Group of Companies. And our goal today is to discuss about the options that technically these incentives or the stimulus bills are going to bring up, into our business or individuals, and how they're going to advantage and help. So back in April or May, Senate had passed, or Congress, a House had passed HEROES Act, which was House's controlled majority by Democrats today. And then in response to that, the senators had passed HEALS Act, and our goal is to contrast each of them, that how they are different and how which group of people they try to advantage. As of yesterday, they have not reached a consensus on neither HEROES Act or HEALS Act or a modified version of that. And our President Trump had mentioned that if they do not reach consensus, then they might very well, implement through some kind of program through the executive powers he has. So HEROES Act primarily is was focused more on giving direct assistance to individuals, and HEALS Act was a combination of individuals and businesses. HEROES Act technically increased the federal funding for Medicaid from 6.2% to 14%. The HEROES Act bill was about $3.5 trillion. HEALS Act bill is about $1 trillion. Versus HEALS Act left the Medicaid as unchanged. No increase or decrease was proposed as part of that. The unemployment benefit, there are two kinds of unemployment benefits. One we are talking about is the state benefit, which are based off of the earnings which you make. So if you had 4 consecutive quarters in last year or before you claim your unemployment, and you had reported income or you had earned wages, then based on that, State Department of Texas would grant you an unemployment through the unemployment insurance, which is paid by the employer. Typically, the unemployment insurance is, give or take 2.7% employer pays every paycheck, and via which they support paying the unemployment benefits to the employees. If you recently joined, my recommendation is that if you have any questions, use our Q&A section or chat window to ask me questions. We'll be discussing throughout this webinar and also open it for questions on variety of things. Our webinar is present also going live right now through Facebook Live platform as well. Again, my name is Sam Thakkar. I'm Group CEO, Perfect Group of Companies, and Perfect Group of Companies predominantly include Perfect Tax, Fun Asia, Fun Movie Grill, Fun Pizza Kitchen, and Perfect Capital. Each department or each business units are headed by a CEO of respective business units, which includes Vaishali as a CEO of Perfect Capital and Perfect Tax. There is a federal unemployment which was extra passed as part of the CARES Act, which was the initial stimulus bill that was passed. And as part of this thing, everyone who received some kind of state assistance was getting additional $600 a week in supplemental unemployment benefits from federal government. The HEALS Act proposal is to reduce that to $200 for month of August and September. And October, that proposal was to possibly bring it back to $500, not to exceed total salary of 70% of the wages which you originally had. The HEROES Act wanted to continue this insurance through January 2021 of $600. The biggest challenge was the Republicans feel at this point of time, or President feels that, with more $600 flat unemployment, it is creating a disadvantage for individuals to go and work who are going through the unemployment issues. So that is why he wanted to change it. Democrats want to support the economy, and that is what they wanted to propose. That there is also for individuals, for people who are not businesses, they were proposing $1,200 under HEROES Act as one-time payment and $500 payment to children. That is the same exact thing between HEALS Act and HEROES Act. There's no difference here. HEROES Act wanted to support $500 billion for states and Washington DC, and $375 billion for local localities or municipalities or cities or counties. HEALS Act had $105 bill, no additional funding was there, but $105 billion was allocated for education of reopening the schools in September. HEROES Act was proposing hazard pay for healthcare workers for $200 billion. There was no provision of hazard pay in HEALS Act. HEROES Act had some extra expenditures and expedites production and distribution of PPE, which is the protective equipment through Defense Production Act, versus HEALS Act had no extra provision for PPE. HEROES Act had $75 billion for testing, tracing, and isolation and hospital support, versus HEALS Act had $16 billion for testing and treatment. HEROES Act had $100 billion for hospitals. HEALS Act had $25 billion for hospitals. One of the key important things for businesses, HEROES Act had HEROES Act had $10 billion extra allocated to EIDL, which was the Economic Injury Disaster Loan Program, versus HEROES Act had close to $200 billion additional in PPP funding, plus it was also utilizing unused portion of previous allocated PPP funding of $130 billion for companies that are smaller than 300 employee companies, and for companies who have lost in last 2 quarters or preceding quarters more than 25 to 50% of gross revenue. Now there is a debate going on today. That is one of the contention issues between the House and the Senate, or the Democrats and Republicans, is that how much that amount should be. There are various proposals for small businesses. One of the proposal is to reduce the drop in revenue to 20% instead of 50% to be eligible for additional PPP money or second round of PPP money. They also were proposing, there is an additional bill which Senator John Cornyn had proposed as an independent bill, which was about increasing the EIDL funding. Today, Economic Injury Disaster Loan Program, even though maximum amount allowed by Congress was $2 million, the maximum loan that they given out was only $150,000. And the grant, which was authorized up to $10,000 for small business, the maximum grant that was given was either $1,000 or $1,000 per employee, not to exceed $10,000. So at that point of time, there is a proposal by Senator John Cornyn, and there are 10 additional senators, bipartisan support between the Republican and Democrats, which is supporting this bill. Possibly there was also discussion of including that bill as part of the stimulus discussion going on right now. Today, our president has said that if they cannot reach a consensus, he will use executive order to avoid the, to give reprieve to tenants who cannot pay money, that they are not evicted. At the same time, possibly they are also talking about using the same program or same executive authority to increase the $600 a week unemployment pay. But we would have to figure out in this coming week, possibly in this coming week, what decision they reach. Other business funding that is allowed, or other business programs that are actually created to help for federal to help small business were, there were three programs which were actually funded, out of which the first program was PPP, which was Paycheck Protection Program, and it was round one approved for $350 billion, and additional $300 billion was approved, with a total amount of $650 billion was approved for payroll protection program, paycheck protection program, out of which $130 billion is unused, because businesses who were able to take advantage of have already taken advantage of that. So today they are talking about repurposing that additional money left over and possibly coming out of the second round of liquidity for individuals, and also allowing additional utilization beyond payroll for this money. This program particularly, Paycheck Protection Program particularly, was designed with forgiveness in mind. So any money technically you received as part of Paycheck Protection Program could be eligible, if you use it for qualified uses, could be eligible for forgiveness. For the another program that was also funded as part of the CARES Act was EIDL program. EIDL program particularly was designed, and I'm quickly giving you the difference in these three programs. EIDL program was designed with giving people working capital kind of loans, having more utilization beyond PPP. The way these loans were granted was based on the revenues and cost of goods sold, and not to exceed $150,000, versus there was no forgiveness except the initial grant portion, which was $1,000 to $10,000 that every business received. The repayment terms were 2 years to 5 years for PPP. EIDL was 30 years with no payment on first year. Interest rate for PPP, if you have non-forgiven loan for PPP, it was 1%. For EIDL was 3.75%. And the third program they had come out with was called Main Street Lending Program. Main Street Lending Program primarily was based on, the loan qualification criteria was based on EBITDA. EBITDA stands for earning before interest, tax, depreciation, amortization. The forgiveness was based on the forgiveness in this program. There was no forgiveness in Main Street Lending Program. EIDL, as I mentioned to you, the forgiveness was $1,000 to $10,000, and PPP forgiveness was 100% could be forgiven if it was used for allowable expenses. Repayment term of PPP loan was 2 years to 5 years. EIDL is 30 years and Main Street is 5 years. Interest rate is 1%. EIDL was 3.75%, and Main Street is LIBOR plus 3%. Based on today's rate, it will be about 3.5%. PPP payment deferral was 6 months. EIDL payment difference is still end of 2020 or 1 year. Main Street Lending Program, the payment deferral is for 1 year, and interest and the capital is deferred for 2 years. Underwriting, every business was approved based on the info provided for payroll for last year. EIDL was at the discretion of SBA, and Main Street Lending Program is executed to Federal Reserves by Treasury through banks. So banks use their normal underwriting process as part of Main Street Lending Program. Again, people who have just joined and have questions, feel free to ask questions on Q&A section, or ask those questions on the chat window, and I will try to answer those questions through this process. What was the purpose of the loan? Main Street Lending, PPP purpose of the loan was to make sure that the payrolls were protected or the employees were protected and received a paycheck. The EIDL purpose was to give the working capital loan, and Main Street Lending Program is for companies who have good cash flows or maybe have cash flows, but they are not able to obtain credit elsewhere. And that is why Main Street Lending Program was created. Main Street Lending Program starts for businesses as little as $60,000, $40,000 in gross EBITDA. EBITDA again stands for earning before interest, tax, depreciation, amortization. So you have to add back your interest amount, tax amount, depreciation amount, and amortization amount to come up with EBITDA calculation. And based on the EBITDA calculation, the loan of Main Street Lending Program was calculated. Main Street Lending Program needed companies who have less than 15,000 employees were qualified, or companies who have less than $5 billion in revenue were also qualified. Companies who have to be incorporated in US, it was not a program. All three programs could not have been used for businesses who were established outside US. It also does not participate, Main Street Lending Program was available for businesses who had participated in EIDL and PPP as well. So requirement was not there that you had to technically take, both. The types of loan under Main Street Lending Program. There are three types of loans under Main Street Lending Program. MSNLF, which stands for Main Street Lending New Loan Facility. MSPLF, which stands for Main Street Lending Priority Loan Facility. MSELF, which stands for Main Street Lending Extended Loan Facility. The minimum loan amount for NLF and PLF was $250K. MSELF, which is Extended Loan Funding Program, is $10 million. The maximum amount is $35 million and $50 million versus MSELF is $300 million. The loan term could be secured or non-secured, or it could be non-recourse or recourse, both in all three cases. Maturity of the loan is 5 years. You need to own a business to avail this program. Interest rate is LIBOR plus 300 basis point. There is no prepayment penalty. The principal plus interest are deferred for year 1, and year 2 principal is only deferred. Principal amortization or payback schedule is 15% at the end of third year, 15% at the end of fourth year, and a balloon payment of 70% at the maturity. So that is why banks very closely look at this program. They are going to make sure that the business is in shape to be able to make sure that they are able to meet this repayment terms. Loan participation, where Federal Reserve would buy out, the loan would be originally originated by bank. Bank would keep 5% of the eligible loan, and 95% of the loan will transfer over to a SPV created by Federal Reserve versus a special purpose vehicle created by Federal Reserve. Types of loans and details. You are going to pay origination fee of lender of 1%, and then there are obviously perfect capital fees of 1.5%. These are all one-time fees, not a repeat fee. I think we already covered this slide. Again, people who are just joining, please use Q&A window or to ask questions, or use chat window to ask questions. Unlike PPP and EIDL, Main Street Lending underwriting process is very exhaustive process. It works like any working capital loan. Banks review business plan, banks review owner's profile, banks review current cash flow, banks review last year's cash flow before COVID, banks review future business projection and prospect, and then Treasury guarantees his loan. So why should you use an expert to help you with your Main Street Lending Program? In Main Street Lending Program, as the underwriting process is very exhaustive, it's not as simple as PPP or EIDL. It's a smart idea to use an expert versus trying to do it yourself. There are very few banks that are eligible. If you're self-applying, you have to check if your current bank is doing it. And a lot of banks, example, BBVA Compass, I had a call with them yesterday, and they said that they're not taking any Main Street Lending Program below $2 million in loan. So there are a lot of big banks like Bank of America, Chase, and other banks who are not interested in doing a Main Street lending program for clients, even though government allows to do that, they can set their own limits that they will not do below this amount. At the same time, additional, what when we work with us, we are working with multiple banks where we have extensive relationship with. Financial analysis. We have over 200 years experience of financial analysis and creating business plans, projections, and taxes to make sure that you get the most money through these loan programs. You have peace of mind that experts are handling your case. In your self-application, it could become very stressful because banks do ask variety of questions and they need many documents to help you through this process. Fees are only paid if the case becomes successful. In self-application, the chance of rejection is very high. They say on an average, if you're self-preparing the case, your chance of rejection is close to 75%. What business are ineligible to apply for Main Street Lending Program or for PPP or EIDL? Any financial business primarily engaged in business of lending, such as bank, finance companies, pawn shops, factoring, lending programs, lending companies, are not allowed to borrow from either of these three programs. Passive business owned by developers and landlords that do not actively use or occupy assets, or they acquired or improved with the loan proceeds. Life insurance companies are not eligible. Businesses in a foreign country are not eligible. Pyramid sale distribution plans, people who have multi-level marketing schemes are not eligible. Business deriving more than 1/3 of their annual revenues from legal gambling activities. Business activities engaged in any illegal activity. Private clubs and business where you're not limiting the number of members for any other reason than capacity. Government-owned entities are again not eligible for these loans. Businesses principally engaged in teaching, religious, or secular settings are also not eligible. Business with an associate who is incarcerated or on probation or on parole is or has a felony or a crime of a moral turpitude is also not eligible. Businesses in which the lender of CDC or any of its associates own an equity interest is also not eligible. Anybody involved in a live performance of prudent sexual nature kind of a business are also not eligible. Directly or indirectly, gross revenues through the sale of product or services which are in sexual nature are not eligible. Unless waived by SBA for good cause, then only all the businesses that are ineligible, they're ineligible for all three kinds of loans. Businesses engaged in political or lobbying activities are ineligible. Speculative business are ineligible. I think we already talked about the fees. These are some of the commonly asked FAQs to me over the last few seminars and webinars I've done. Are Main Street lending loan full recourse or forgivable? So Main Street lending loans could be recourse or non-recourse. Majority of the time it would be a recourse loan. What that really means is that you're personally responsible to pay the loan back if your business cannot pay it. At the same time, in a Main Street lending program, the principal amount which you owe does not qualify for forgiveness. How long the program will be in effect? Today the program is extended till December 31st. And that was our last week's update. Is there a limit to the size of the program? Currently, Feds are buying these programs up to $600 billion. Which entities are eligible to borrow under the program? So any company that was established before March 13, 2020, and it is not part of an ineligible business list, which we just went through, and entities technically that have good sound financial foundation and they feel that the businesses are going to continue surviving in this environment. What documents will be required? You need a financial statement, which includes profit and loss balance sheet, will need 2019 to start with, and they might ask you 2018, 2017. They would also ask you tax returns for prior years and this last year. They would also ask you for interim financials that gives them an idea of where and how far along your business is in this current quarter. Number of employees, loan approval, but you're not yet granted in its nature, business plan, financial projections, and how is business impacted currently during COVID. These are the documents we need to start your process. So we do following tasks as part of this process. We check with existing banker of the client if they are participating, and check with that client and the banker that if we are able to use this program. We also work with multiple different banks. We directly work with the bank manager dealing with MSLP loan. Not all the bankers are also aware of this program within the bank. We understand the documents required from the bank. We collect the documents. We calculate the EBITDA. We study all your existing loan programs. We make the Masonry Lending Program application, and we review the loan closing and negotiation on your behalf. And that's how we do the whole thing. I think we already talked about that. On the screen gives you a number, how you can contact us for this program. The phone number on the screen is 469-213-1519, or you can send an email to info@perfecttax.com or salesteam@perfecttax.com. In order for you to avail some of these benefits and facilities, don't procrastinate, because a lot of these programs are always in flux or they run out of money. So this program was introduced in July. It has been 1 month. So don't procrastinate, don't wait. Start the process right away. Our phone number is 469-213-1519. We have people available for your benefit who is going to help you answer any questions you have which I might not have covered. Again, I really appreciate everyone joining today afternoon's webinar. This is Sam Thakkar from Perfect Group and Perfect Group CEO. I appreciate everyone joining. Thank you very much.